Hi, this is Doug Hutchins with Kentwood Real Estate here with the February 2023 City of Castle Pines Real Estate Market Update. The market's been holding pretty steady in the City of Castle Pines, and I'm going to break down some numbers here for you briefly, and we're going to look at the original communities and the new communities here in these data points. Starting off with the original communities, you can see the average price was down from February of this year to February of last year. However, remember that there's so few sales in the City of Castle Pines that the average monthly data can vary substantially, and it doesn't necessarily mean prices are going up or going down. It's just depending upon which homes sell. If we have more higher price sales in the month, then we'll see our averages move up. If we have fewer high dollar sales and more low dollar sales, we'll see the averages move down. But if you look at the City of Denver overall, average home prices did creep up a little bit from January to February, and I think that probably was consistent with what we saw in the City of Castle Pines as well. A few key stats off of this sheet here are the active listings are staying relatively low. They're staying at 14 active listings. And if you look at this next chart here, this breaks out the active listings in the City of Castle Pines. The orange line is the 12-month moving average, and the blue line is the actual. And what you see really is before 2020, we were averaging about 40 homes on average on a rolling 12-month basis. If you look now, we're still under 20 homes on a rolling 12-month basis. So our inventory continues to stay low in the City of Castle Pines and the original communities. The pending listings, we did get to 7 under contracts here. Those are homes under contract but not yet closed, and 10 closed sales. Now what's interesting is the new listings, again, we had 8 in the month of January. And if you look at 2015 through 2019, the pre-COVID 5-year average was actually 18 homes listed in the month of February compared to 8. So we have less than half of the number of new listings coming on the market. Again, home sellers, current homeowners are not wanting to sell their home and they're staying put. The pending sales of 7 homes is way down as well, though, compared to the 2015 to 2019 pre-COVID average. During that time frame in the month of February, we typically had 13 homes go under contract versus only 7 this year. But because new listings are less than half of what they typically are and pending sales are roughly half, our inventory continues to stay at low levels. If you look at the inventory levels, we're still just at 2 months of inventory, and that's a very low level. You know, it typically takes inventory going above 4 to 5 months before we see prices fall substantially. So again, I think in Castle Pines and the original communities, we're going to continue to see prices stay supported throughout the rest of 2023. We should see our average home prices staying relatively steady. Maybe they'll creep up a little bit if we have a strong spring selling season, but at this point we should stay relatively flat. Buyers just need to know that, again, we're not going to have a lot of choices on the market at any point in time. It's just the nature of the new market here in Castle Pines as well as Metro Denver. The second thing we'll look at here is the new communities. So if you look at what's going on in the new communities, and these again are the communities built after 2010. So generally the Canyons, which is to the east of I-25, and then the new communities built along Legay on the west side of I-25. And again, you've got to remember that as we look at these stats here that you're seeing, that builders do not report all of their sales into the Realtor MLS system where this data is pulled. So this number here, these are understating sales and inventory because, again, the builders don't list all of their active listings or report all their sales into the MLS. But it still gives us a good snapshot of what's going on. Now what's really interesting here is we've got a very strange phenomenon that illustrates the whole average pricing concept that I talked about with the original communities, and that is that in February of 2022, the average sales price was $2.18 million. And that's because in February, there were only 2 homes that sold last year in 2022. And those were both $2.2 million homes that Infinity had built in the back of the Canyons. So those homes obviously skewed the average way up. And I actually broke out the chart here. If you look at this chart, it shows that huge spike as the blue line of those few sales. But if you look at the $1.1 million average in February of 2023, that's actually relatively high. That's the 7th highest monthly average sales price in the new communities since the new communities started 6-7 years ago. Active listings, we have 17, and again, listings are growing a little bit more rapidly in the new communities than the existing communities or original communities, because again, builders are building more homes that are not being sold at the time they're building them. So they're seeing more inventory come on the market and we're seeing that inventory rise. And that's reflected too as in the average days to sell is up to 66 days in the new communities, which is a little bit high, but again, we can see these crazy fluctuations because of the few number of sales. Overall, the other chart I wanted to show you here just has the active listings, new listings, and sold listings in the new communities. And this illustrates really well the impact we have if new listings do not substantially exceed existing listings. So the orange line is the 12-month average of active listings, and what you'll see is that orange line grows larger as the blue line is higher above the green line, and then the orange line drops as the green line goes above the blue line. So the green line are sold. So if we have more solds than new listings, of course our overall inventory is going to drop. If we have more new listings than solds, our inventory is going to grow. And that's what we're seeing is the orange line is starting to go up as we in February, January, February of this year, because we're seeing more new listings than we are solds. Overall, the pricing in the new communities continues to be driven by what the builders are charging. Builders, again, are trying to hold their prices flat and not dropping. They're starting to do more incentives in the new communities to encourage buyers to come in to buy these inventory homes that are starting to pop up. But overall, again, prices in the new communities should stay relatively flat over the rest of 2023. If you have specific questions about the real estate market in Castle Pines and how it's impacted your home value, please reach out to me. You can reach me at 303-886-3437. Also, you can look at data that we post monthly on discovercastlepines.com. We have these videos recorded there as well as on my website, DougHutchinsHomes.com. We'd be happy to talk to you. And of course, always remember, we're willing to give you a free market valuation of your home to let you know exactly what your home will sell for in the current market conditions. There's no cost, there's no obligation to that, and we're happy to do that. We look forward to seeing you soon. Take care and have a great day.